Well, it's all but official. The Fed has cut interest rates by 50 basis points. Now, this has been obviously talked about and expected for the most part leading up and for the last few months. And everyone's probably been hearing about it this week, but I just wanted to make a video on this because this is something big that I think will happen for gold and silver. And with the Fed interest rate cuts recently, the S&P 500 and the Dow Jones have hit all-time highs this week. And it was kind of an interesting reaction at first because typically when interest rates get lowered, the markets usually will shoot up, but it actually went down for a little bit. And then over the last few days, it's really responded back up the way that we expected. And it's just absolutely on a tear recently. And even silver and gold both kind of had a similar reaction. They started at around $30 and then dropped, actually just over 30 at 30.70, dropped down to 30.08. And since then, it's just been going up to right now, currently at 31.27 for silver. For gold, very similar path, dropped just below 2,600 and now is just shooting up to $2,630.08, a 1.48% gain. I mean, it's gold and silver have just taken off, which is what we expected it to do. Okay, so I want to point out one thing that's going to kind of make the entire video here. So I want to talk about what is going to happen and why I think gold and silver are still really good deals even right now because of what could be happening or what based off of history of what it's going to look like. So I want to start with the Fed funds rate. So on this graph real quick, if you guys look at these gray vertical lines, those are the recessions that have occurred in the last 30 or 40 some odd years. And I made a video about this before, and I'm going to link that up in the top right, but specifically with the interest rate cuts, every time there's been a gray line, it's been because the interest rates get cut, and at the same time, the 2-year and the 10-year curve uninvert. Now, that has happened recently and has been uninverted for the last few years. I mean, if we look back, I think it was in July of 2022 is when it crossed over into the negative territory where it inverted, and it's been staying under that line all the way up until about the last week or two. So if you look right now, it's at 0.14, so it's crossed over. And I was waiting for this to stay above that positive line, and it's been staying above that line since, let's say, the beginning of the month. So it's been almost a month now of this. And every time this uninverts and it stays positive and the interest rates get cut, you have these gray lines of recession. So if we look here, I'm going to talk specifically about the interest rates because I don't want to talk about the recession, but I want to talk about the interest rates because when the recession begins, these interest rates get cut hard and fast. It happened here in the 90s. It happened again here in the 2000s. It stayed flat, and then they started cutting, and it went down. It went from 6.4 in 2000 down to just under 2. And then in the GFC, it started at 5.25, got started to get cut, and it's just been at 0. So it did the same thing during the pandemic. And right now we've been sitting flat, and we just now cut the interest rate. And I believe that those interest rates are going to be cut even further, and it's going to be kind of shown here. If we look at the CME, the Fed interest rate expectations of what's going to happen, I mean, they're expecting cuts to continue on all through. I went through each and every single date, and if we just go through, I mean, they're expecting cuts by, let me see what they're doing. They're expecting to cut almost, I mean, currently we're at 475 to 500, and it's either going to be another 25 basis points or it's going to be another 50 basis points cut. And if we look throughout the rest of the tabs here, in December, they're expecting it to even go down further. January of 2025, they're expecting it to have a low chance of even going any further. But I believe if we look at the history of what I just showed you guys with these interest rates, and you guys take a look at what everybody's expecting, I think this graph is going to eventually shift down. If we just maybe go out 6 months from now or so, I don't know if that's even 6 months, but if we go out from now, just looking at this graph, I expect this to even be shifted down even further to the left, just because of what's been going on in historical past about how quickly they cut. Will we get back to 0 like we did in 2009 all the way pretty much until 2015? I don't know, but I definitely believe that the interest rates are going to go down further, and they're going to go down faster. It could very well go to 0. All right, so I want to go into the article that I saw from Schiff Gold. Now, I do follow Peter Schiff all the time. I mean, I believe he's correct on a lot of things. There's hardly much that I really disagree with. But I want to point out this one little, little blog that he put in that I didn't even really pay attention to, because I think this is being hidden by all the interest rates. But it says, meanwhile, the national debt keeps setting records. The U.S. government ran a budget deficit in August in 1 month of $380.1 billion in 1 month. He says that it used to be an entire year. He remembers when that amount was a bad deficit for the whole year. But we did this in 1 month. It's the biggest deficit we've run as a nation in the month of August. That includes the 2020 during the COVID pandemic. There's another article here that I found, and it kind of just reinstated the point here. You know, $380 billion was created in a deficit by the government, and that brings the government fiscal year-to-date budget deficit of $1.9 trillion. And their government fiscal year does start on October 1st, so we're heading towards the end of that. But regardless, they spent $1.9 trillion in I mean, that is just crazy. And to make my case with everything, again, I expect gold and silver to this. I mean, you are just creating a pressure cooker for gold and silver to absolutely just go off, and all the precious metals, because when these interest rates get cut, eventually what happens is you increase the prices, which causes inflation. And you have all this ridiculous deficit spending that they're going to be printing even more money and all of these things. I mean, you would be crazy to not want to be investing in gold and silver right now. I mean, that's why we've seen such crazy gains in the last year, is because of all the deficit spending from the 2020 era and everything that's happening probably now with all these interest rate cuts. I mean, I don't think it'd be too far off to think that gold could hit $3,000 and silver could hit $40 by the end of this year. I mean, and with everything that I just mentioned, with these interest rates going down, and with the federal deficit just absolutely going crazy and having no cap on anything, gold and silver, I mean, you can just guess what the number is going to be. So the prices you see right now on SD Bullion, for example, are going to be really good deals. I mean, I'm looking 6 months out to maybe even 5 or 6 years out. This is in my opinion, a very good situation. I mean, it's a bad situation, but it's a good situation if you're trying to invest in gold and silver. So that's all I'm going to talk about in this video, guys. It's just really quick. Let me know what you guys think in the comments down below. Do you think that this is going to be something that takes off in the future? Let me know what you guys think in the comment, and I will see you guys in the next one. Bye-bye, guys.